What's up guys, it's Harry Haas here, and today I'm going to be doing a video on things I wish I knew before I started trading. This is for longs and for shorts. This video doesn't really have a preference. Some of my other videos have been kind of like, how to spot a short trap or, how to long first bounce or whatever, but this one's really kind of a neutral video for longs and shorts, and it's just things that I wish I knew before I started trading. Obviously, I'm not, a licensed financial advisor or anything like that. This is all for educational purposes. But without further ado, I'm just going to get started. So number one thing is plan your trades. So have you drawn your lines? Have you prepared? Have you drawn the levels that you needed to have drawn in order to kind of prepare you for the open? Have you checked FinVids? Do you know the float of the stock? Is it a higher float stock? Is it a lower float stock? All these things matter. You can check big charts for lines as well. It's part of Bao's process. Joe talked about it in the boot camp. Bear as well. So a lot of people use big charts as well for lines. Are we above or below VWAP? Who's trapped in this scenario? Usually if it's kind of pre-market, we usually start out above VWAP, but sometimes we have stocks that have faded and maybe trapped longs. So, are we above or below VWAP? What side is in control? And, do you have all your levels drawn, and are you prepared for the open? And I think a big thing in planning your trades that a lot of people kind of overlook is, what is your risk going to be? If you're chasing at the highs of 150, sometimes your risk reward is going to get skewed there because, a lot of these times when stocks spike, they want to pull back, and, are you the one that's going to be stopped out because you've been chasing at the highs? So that's another thing. What is your risk? And, again, context is always going to be key. Are we front side? Are we back side? Are we getting a lot of volume? There's all these things. Do they have a shelf? Do they have do they have something else to keep in mind? Is it a recent runner that is now gapped up for the second time? So all these things are very, very key. Another thing is, don't try and be a hero. There's no need to be early. There's no need to enter early out of FOMO. It's better to enter a trade with a higher probability than to enter a trade that is 50-50. And, this is so true. Like, I see people all the time, the stock is on the backside, it's dead, it's not doing a lot of volume, and people are just trying to pick bottoms all the way down. Or, I see the reverse as well, when a stock is trading clearly front side and we have shorts that just keep wanting to short it, even though Alex and Bao may say in the main chat, guys, this isn't a short, this isn't something that I'm interested in right now, this is a low float. We still sometimes have guys that don't want to listen, and girls too as well, that don't want to listen and, end up kind of blowing their account because, they don't want to listen to the warnings, and they want to get the top. They want to have that nice, sexy top tick. But in reality, those top ticks are actually, you may get like one out of whatever, or maybe you're really good, but if you're new, if you're just starting, and I really did make this video because we did get a lot of new members, we got a lot of new people joining, so it's always better for you to take a trade with a higher probability than to enter one that's kind of 50-50. And you can wait for a higher low or a lower high rather than trying to guess the top. In weekend mentoring, me and Tosh always, all the time, are always recommending that, you wait for a death candle or a shift in momentum. And, you'll be able to see in main chat, kind of what we're talking about. But I think it's really important that shorts wait for the backside and longs wait for the front side. Or maybe there's usually not a lot of waiting for longing because usually it's kind of the front side right away. But for shorts, it's always important that you wait for that backside. So I just wanted to kind of make a video or a visual of this as well. So here we clearly have price that's kind of downtrending, right? We're making lower highs and we're making lower lows. But here we start to creep up a bit, and we start to kind of creep up, and now we're kind of getting higher and higher. Shorts have plenty of time to cover, right? I see all these short sellers, on Twitter, or it's mostly just on Twitter, where they're like, we just hold for an all-day fader. That's all we hold for. But in this type of market, if it's 10:30 and it's zombie time and you're seeing the stock start to kind of creep up like this, you have plenty of time to cover. There's no reason why you should be taking a loss. And as a long, you have plenty of time to enter as well. There's no need to be entering up here or up here into pops. You have all the time in the world to enter as well. So it's kind of a double-edged sword, right? As you're along, you don't want to be trying to pick these bottoms, and as a short, you don't want to be holding all the way up and end up having a winner turn into a loser. So it's always important to kind of watch the trend, to watch the volume. Longs, you have plenty of time to enter, and shorts, you have plenty of time to cover, especially in a scenario like this, which we see all the time, right? When we start kind of creeping up and grinding higher, you're like, oh, I was up 1,000, now I'm only up 500, and slowly that 500 turns into 300 and 200 and 100, and then before you know it, you've kissed your gains goodbye on the day. You want to keep holding, then you kind of go, by this point, down 1,000, down 2,000, and that's how those kind of losses start. So if you see this grinding action going higher, don't ignore it. Don't walk away. Say, all right, listen, I think it's grinding higher. I'm going to leave my ego at the door. I'm going to listen to price, and I am going to cover. Or, if you're a long trader, you're like, wow, it's kind of grinding higher. I see a lot of shorts fighting this one. I'm going to buy on a dip. That's perfectly fine as well. Just kind of, if you're buying here, you can just risk down below here. But if you're a short seller and you do see it grinding higher, by the time it gets to these kind of blowout levels, every short is now kind of done. They're throwing in the towel, but you don't want to be that guy. You want to be the one that covers when you kind of see that trend change. So I think that's important as well. And don't chase, be a sniper. Let trades come to you. When you go looking for trades, you'll lose, but if you're kind of sitting in your seat, you're waiting for edge, you have a 100% better chance. I'll give you an example of this. If you're a short seller and you see 3 stocks that are all front side, they blow right past your levels at the open, they're spiking, there's no need to go and try and pick that top. What you can do is wait for a death candle or wait for a shift in momentum like I talked about, and that is, going to give you a 100% better chance. If you're a long trader and you see, 3 stocks out of the open, kind of pop, you're going to be looking to kind of buy on a dip. You're not going to be looking to chase. You're going to be looking to buy dips front side, right? And, as a trader at the open, that's just sitting on your hands waiting for edge to appear. You're not going to be forcing trades. You just need to really stick to your plan and, stop out when you're wrong all the time. If you lose on a trade and you try and enter into another one right away, you're probably going to have a 99.9% chance of losing. This is something when I first started, I would take a loss and right away I'd be, okay, what's the next thing running? Or what's the next thing tanking? Or how can I get this money back right away? How can I get back what I just lost right away? And in trading, that is not the way to do it. You need to sit on your hands, you need to wait, just like I kind of talked about. And sometimes you may only have 2 or 3 opportunities in a day where you have edge. And it's your job to exploit that. Rather than over trading, making 30 trades in a day, pick those 2 or 3 where you can exploit it and really have edge. I think that's really important and something that, if you work on that skill is very, very valuable. Chasing will be the death of your account. I see a lot of longs, they'll look to chase moves into the highs and they'll be selling at the lows. And what you really need to be doing is taking into account the context of the chart, what's going on, who's trapped, your levels that you have already pre-drawn. You need to be paying attention into all of that. And lastly, I'd say trade the chart, not the P&L, right? If you're seeing a stock on the backside, it's probably not the best idea to long, especially if you're longing out of FOMO to try and get money back. And if you're a short trader, it's not the best idea to try and fight front side and try and guess. Wait for that shift in momentum. Wait for that backside. Wait. Just be patient. Just be super patient and just let the trade come to you. I know I've talked about this already in the last slide, but I really want to stress this you can't stress this enough, is never buy a breakout and never chase any weakness. It's always better to buy dips and resist FOMO, and it's also always better to short pops and resist FOMO as well, right? If I know I've said this a lot, but I'm really reiterating the fact that I see a lot of people trying to guess the top, and I see a lot of people, they've either missed the move, so they're going to try and short weakness, and then they end up getting squeezed out, and they're not waiting for a pop. Anytime I slam the ask or the bid, it's usually out of FOMO, and my odds of losing are greater. And I think that is, that's just, that's what happens all the time. So never buy a breakout, never chase any weakness. Just all you need to do is just be patient, wait for that backside. If you're a long trader, wait for that front side. And I do, I've said this probably 20 times already in this video, but it's really important that when you're seeing a stock making higher highs, that you're not just going in trying to cherry pick the top and short it. And when you're seeing that same scenario as a long, you need to jump in and start saying, okay, this is a stock that's the hot chick of the day. I need to start thinking about buying dips. I need to start thinking about where I'm going to enter. I need to start thinking about my levels. I need to start thinking about, a lot of stuff like that. And I think that's really important. So I get a lot of questions of, Harry, how do you know people are trapped? How do you know a long is trapped? How do you know a short is trapped? How do you know this? I'm looking at the chart too. How do you know this? That's probably my most asked question I got this week. How do you know someone's trapped? How do you know that? And it's pretty easy. Just look at the chart. So in this scenario, let's say we have some consolidation. We know that people are probably short in this area. We know that people are probably long in this area, right? So when it goes under that price, we know everyone who's long in that area is now trapped. And usually we're going to get a tank, we're going to get a pop, and then price will continue lower because everyone who's trapped is just looking to sell into that pop to at least get break even, or maybe they're even hanging on and they see this low get taken out, right? And then they're all pressing the sell button. And we have, shorts pressing the sell button. We have longs pressing the sell button. We have those two teams kind of working together. And that creates a hell of a lot of excess supply. So that is something that I always pay attention to. And in this scenario as well, right? People ask me every single day, well, how do you know someone's trapped? How do you know? Is it by using the tape? Is that how you know? Is that how you know? No. Just take a look at the chart, right? Is the stock making higher highs and higher lows, or is it making lower highs and lower lows? That's important. When a stock is going down, that means that people are selling it. Sellers are winning. When a stock is going up, it means that people are buying it. Buyers are winning. And, this may sound super simple, but a lot of people get caught up in, but there's a seller here. But there's a seller here. There's a seller here. There's a buyer here. There's a seller here. There's a buyer here. There's a seller here. There's a buyer here, right? There is a seller here. There's a buyer right here. That is most important. So yeah, you may see a hidden seller, but what context is that seller in, and what context is that buyer in? Because I see a lot of people who are like, but I saw a buyer on the tape. Okay, yeah, but there's a seller right here as well. So it's really important that you're really using context, and context is super key. So in this situation, we probably have people who are long here and people who are short here, right? We do 100%. But as we go higher, we know that shorts are now trapped. Shorts are in trouble here, right? What they need is a tank back lower in order for them to have a green P&L again. We know that shorts P&L is now red in this situation, right? And now we go higher and we end up squeezing. We have longs who are chasing, pressing the buy button, and shorts who are covering, pressing the buy button as well on the ask, and that creates a perfect storm for a move to go up. Just like in this scenario, we have people who are long and short right here. But shorts don't need to cover because they feel safe, right? But a short feels like it's in danger here. And they're pressing the buy button and the stock's going higher. So it's always important to know that context. And if you're a short seller in this situation, you should really wait for something like this to happen for confirmation to show you that the price wants to go lower, right? Because right here it's kind of another 50-50 trade, right? And now that you're waiting for a dip here as a long trader, you have significant edge because you know that people are trapped here and you're going to just wait, right? instead of getting along here and saying, well, I hope it can go higher. I hope it can do this. Well, now in this scenario, we know that it's probably going to go higher because we have the other side who is trapped and they're scared, they're panicky. They're traders are emotional, right? When you're down money, you're emotional. If you're down $2,000, you're emotional. I don't care who you are, right? You are going to be emotional. So you want to you know that whether shorts are going to want to cover this dip and they're going to want to cover all the way up. So it's important to know who's trapped. This one I'm kind of passionate about it because I do I record my screens every day. I work really. This is a skill that I work really really hard at, but it's something that I feel has been exploited. I feel that we've had a lot of gurus and people who just don't know what they're talking about come on and speak about this subject. And it's something that, I honestly get kind of offended by it because I see, buy my course, I'll teach you how to read the tape, or how to read level 2, hands on the buy button. For me, that is, I get a little bit angry because, it's really, you really need to use the context with this one. And I get messages every single day. Harry, what'd you see on the tape there in order for you to make the buy? It's like, okay, tape reading is something that you gain over years of experience, but it's not necessarily, a buyer or a sell signal. All you're doing with the tape is collecting information. You may notice that there is a seller. You may notice that there is a buyer. Buyers can go lower. Sellers can go higher. And there's a good quote that I heard where it's like, stocks are moved. Stocks are moved. They don't just kind of move on their own. Like they're moved, right? So buyers can drop lower and sellers can go higher. It's something that, it's not the holy grail, and you can't just be looking at the tape all the time and basing your trading decisions off the tape all the time, right? And that's why I said over recent years, there's been a lot of misinformation about the tape being spread just to sell a FURU course, right? I hear all the time, my tape reading signals, or if you didn't know how to read the tape here, or how tape reading helped our traders make $1 million this year, right? Like that's right. There's obviously more than the tape that's helping them make that money, right? It comes down to lines. It comes down to context. It comes down to who is trapped, right? And when I was first trying to read the tape, I thought this as well, where now I'm just kind of using it, or I'm half using it to just kind of confirm a plan. But before, I would just stare at it. I would just stare at it all day when I was first getting started and say, okay, I'm going to look for this hidden buyer or this hidden seller as along, and that's going to make me millions, right? But at the end of the day, if people had these level 2 signals as they claim, they'd be billionaires. And also, why would they be going out of their way to just share it, right? If you had $1 billion, humans are selfish. If you had $1 billion tape reading, whatever, signal, why'd you go out of your way and say, buy my course and do whatever, right? So I find the tape has been really exploited by FURU marketers. And, it just disgusts me a little bit because you have all these new traders coming in thinking that, oh, it's the tape that's going to make me money. I'm just going to stare at this all the time, right? Like, let's say you see a hidden buyer on a fading stock. Like, does that mean you're going to buy it with all longs trapped, trying to sell into every pop? Well, no. The buyer's probably going to drop lower. You can't stare at the prints all day. And what you can do is, how I kind of learned a little bit was kind of paying attention to your areas of interest, But if you're a newer trader, trying to learn the tape and not using fantasy orders is going to cost you more money. Because you're going to end up missing opportunity because you really don't know what's going on. And, it's really a skill that kind of takes years to learn. Like, I hear it all the time, like, oh, well, I was trying to look for a hidden buyer and I ended up missing the move, right? If you know that 220 is a key support level and you see that, and let's say I set a fantasy order at 221. right? I don't even need to read the tape and I'm already in the stock. And let's say it ends up going to 250. Well, all these little like tape reading traders or, whoever, they're now kind of stuck because, now they've spent so much time trying to figure out the confirmation and is there a buyer here or is there a seller here? They have no idea what's going on, right? And then they see it start going up 10, 20 cents. They start chasing. Oh, well, there must have been something there. I must have missed something there, right? And then price ends up going higher. So it's always better, I think, in my opinion, to set fantasy orders. Like I talk to people all the time and they're like, well, I use the tape for confirmation. It's like, okay, so do you even know what you're looking for confirmation? Like, please explain, right? And well, I'm going to look for a buyer or some big prints or, and it's just a lot of people think they know what they're talking about, but it's like, okay, how'd that work out for you for the last year? Are you a consistent trader by using those confirmation signals? And at the end of the day, they're going to look at me and say, no, I'm not, right? I'm not, I've been trying to use the tape for confirmation and it has really been working out well. And it's like, okay, well, let's look at the last 10 stocks you've traded. All of those 10 stocks were fading stocks on the long side. They were all broken stocks, and it's like they're stocks that Alex and Bao are looking to short into pops. So like, oh, but I thought I saw a buyer down there. It's like, man, if you were trading the hot chick all those 10 times when Alex and Bao were trying to trade those broken stocks, like you'd be fine, right? But I think people are trying to cheat the system a little bit, right? As a long trader, you can't really get away with trying to long the stocks that Alex and Bao and James and Tom are all focusing on, right? Because it just won't work. They're going to be broken stocks. Longs are trapped. You may see 1 out of every 9 or 10 broken stocks really rip, but at the end of the day, those odds are terrible, right? So no matter what buyer you see down there, no matter what you see on those broken stocks, the odds are just not in your favor. So I think it's really important, you can't just stare at the prints all day. And I said this because trying to learn tape early cost me money and missed opportunity because I had no idea how it worked. And that's fine, right? It's something that you pick up over time, and then once you're a trader like Alex and Bao, you're like, okay, this is not what I thought it was in the beginning. In the beginning, everyone's kind of led to believe that, oh, this is the holy grail. This is what makes me money. Oh, do you see that at the tape, bro? Did you see it at the tape? It's like, man, come on, right? Like it confuses a bunch of new traders who could just set fantasy orders on their levels and make money. But instead, everyone wants that holy grail of that confirmation. Everyone wants that, but that doesn't exist, right? The main thing that exists is really front side versus backside and just listening to price and just using the levels like we teach here at MIC, And I talked about this in my last video, and I did want to kind of spend some time talking about this because I talk to people every single day and they're like, well, I use it for confirmation. It's like, okay, so what do you look for confirmation? Well, I don't really know. Okay, well, so it's like in that time where you're trying to confirm and overthink, I'm already in a trade. I'm going to already be there. And by the time that you have figured out that you saw some confirmation or by the time you're like, okay, I didn't see what I want to see, but I'm going to chase anyway, I'm probably selling, right? So I think it's really important just to pay attention to the context and just to, know what you're trading and know who is trapped and know the levels that you want to look at, right? Never underestimate the range of a stock. A $2 stock can go to 10 and a $10 stock can go to 60. No matter how much of a POS it is, no matter how much people are counting it out, no matter how much it's faded, no matter how much all these things, anything can happen in the market, right? Kodak is a great example where we watched that stock go from like $17 to 60 in the span of like an hour or two, right? So respect your risk, have hard stops. It may not happen often, but all it takes is one to blow up your entire account, to blow up months of work. So you need to always be on the defensive. I don't care how much of an A-plus setup it is. A-plus setups require A-plus stops. Or yes, A-plus setups require A-plus stops. You need to always set a hard stop. And don't underestimate how much it is. I've seen stocks where everyone's, well, they got tons of dilution. They're a terrible company. They're this, they're that. They're terrible. They're done. They're never going to work. They're this. everyone's so convicted until they get squeezed and they're like, oh, well, I'm not going to cover here, right? I don't need to cover here. This thing's a POS. Then it goes $1 higher. Oh, well, I'm looking at a pretty bad P&L now. I don't want to cover now, right? Right? And then it goes another $1. And if you're thinking right now, this won't ever happen to me, you're wrong. It will happen to you at some point. There have been the best long plays that have ended up dumping for God knows what reason. A seller came in. There have been the best short plays that ended up squeezing because too many people were short early and they squeezed all the early shorts out. So it's always important that you're using hard stops. You're never underestimating what can happen. You're always on defense. You're always on guard. You're always protecting that account because that's all that matters. That's it. That's all that matters. The rest does not matter. It doesn't matter if you stop out and then it squeezes, or all that matters is that you're being on guard. You're defending your account. What other people are saying, I hear a lot of people, oh, farmer's in the stock, I'm not going to go long, or oh, this is in the stock, I'm not going to do that. Trade your plan and trade it well. Don't let any external factors come into play. Unless it's like a big stuff move or a big seller and that signals that the momentum is over. If the momentum is still there for the long side, long it. If the momentum is still there for the short side, short it, right? Don't have a bunch of people tell you that, oh, this is a terrible long, just to see it go up $2. Shoot your shot. Don't underestimate what things can do. Don't listen to everyone else who is telling you, oh, this is a terrible short, or unless it's Alex and Bao, you should listen to them. But you're gonna hear people all the time on Twitter, on everywhere, saying, oh, this is a POS, or oh, this is terrible, or oh, this is not there, and then just to have the opposite happen. So shoot your shot, use your risk. You can do anything with proper risk management, and try and trade your ideas or try and come up with your own plan. Pay attention to what other people are watching as well, but doesn't mean that you need to follow them blindly. It just means that, that's their 2 cents, that's what they think can happen, and, don't, pay attention, try and come up with your organic ideas, I think that's what we're really respectful of each other's ideas in MIC, because there's sometimes where Alex is saying, okay, I'm looking for a short into 160 and I'm looking for a long into, maybe 140, right? There's different ways to trade stocks. It was crazy because of the boot camp. It was really funny because I was long and Bao and Alex were like, all right, I'm looking to go short at 1.7, and I was selling into 1.7 and they were going short for the backside move. So it was really cool. I just do the inverse as a long trader. So, and as a long trader as well, right? If the momentum is there, you can buy dips. Just because Alex and Bao are going, short a stock doesn't mean that it's not necessarily a long. It's a long at support and a sell at resistance, just like they're selling at resistance and longing at support. So, because I get a lot of messages where they're like, oh, well, Alex was looking to short this stock. It was like, okay, but Alex even said that it wasn't a broken stock. He said that he was looking to go 30% size on the front side, right? Which is something that, he's good at and that he does. And he knows that maybe the odds aren't necessarily in his favor, so he's going to go 30% size, right? So if you're a long trader, buy dips on the front side. And if you're a short trader, I would always wait for that backside move and wait for that, confirmation to say, okay, longs are done, they're trapped. And those are the safest plays, right? And if you have a small account, you always want to be on guard. I just thought I would finish up with this final one where context is key. Context is always super, super, super key. And I talked about this before. Is it front side? Is it back side? Have we just gotten a stuff move? Is it above VWAP? Is it under VWAP? What's the float? Has the float rotated? Is it easy to borrow? Does it have SSR on? All these things matter, right? We need to be taking all the available information into account, right? I've seen tons of easy to borrow stocks fade. I've seen tons of hard to borrow stocks rip because maybe everyone thought that it was going to be easy to borrow when it had a low float and that it was going to be an amazing long, and it ended up being the opposite. And maybe the one that was hard to borrow ended up being the great long because everyone ended up going long it, and the ones who did have borrows ended up getting squeezed out because they thought, so don't ever count anything out. Pay attention to the price action. Pay attention to the context. Pay attention to what's going on. Use your plan and trade your plan well, and draw your lines and do focus on what we are telling you and just really don't try and out cheat the system, right? Don't try and be longing super, super broken stocks, and don't try and be shorting stocks on the front side. And, just doing that is half the battle. Not trying to be a hero, not trying to say, all right, I'm going to predict every single squeeze, right? Because it won't happen. What you want to do is just bat for singles and just let them add up. So, thanks for watching, guys. I'm around anytime. I always answer my DMs, and I look forward to the next one. So, see ya, and have a great rest of your weekend.